You can memorize 1,000 formulas and still lose everything to one emotional decision. Intelligence doesn't shield you from financial ruin. It often accelerates it. The smartest minds I've known have bankrupted themselves not from lack of knowledge, but from the dangerous belief that being smart means being immune to mistakes. Let me tell you something that might sting a little. Your intelligence is probably costing you money right now. I've watched it happen hundreds of times. Brilliant engineers, doctors, lawyers, people with impressive degrees hanging on their walls, making financial decisions that would make a high schooler cringe. And here's the painful truth. It's precisely because they're smart that they fall into these traps. I remember sitting across from a software architect 5 years ago. This guy was making $280,000 a year, had patents to his name, could code in 12 languages. His bank account? Negative $4,300. He looked at me like I was the idiot when I asked about his spending habits. "Franklin," he said, "I've optimized everything. I know exactly what I'm doing." He'd optimized himself right into a financial disaster. The first trap smart people fall into is overconfidence. When you've spent your whole life being the smartest person in the room, you assume that brilliance transfers across domains. It doesn't. I've seen Harvard MBAs lose 6 figures day trading because they thought their analytical skills made them smarter than the market. They confused being intelligent with being experienced. Those are not the same thing. Here's what happens. Smart people read 3 books on investing and think they've cracked the code that eluded everyone else. They create complex spreadsheets, beautiful models, sophisticated algorithms, and then the market does what it always does. It humbles them. I had a friend, a mathematics professor, who developed what he called a foolproof options trading strategy. He lost $127,000 in 4 months. His math was perfect. His assumptions about human behavior, catastrophically wrong. If you're ready to step away from the crowd and make wiser financial decisions, subscribe. This channel is here to help you see money differently. The second mistake is analysis paralysis. Intelligent people want to gather all possible information before making a decision. Sounds reasonable, right? Except in finance, perfect information doesn't exist, and waiting for it costs you opportunities. I watched a couple spend 3 years researching the perfect time to buy their first home. They created spreadsheets tracking interest rates, neighborhood data, school ratings, future development plans. Meanwhile, prices in their target area went up 34%. Their need to make the smartest decision made them poorer. Smart people also fall victim to what I call complexity addiction. If a solution seems too simple, it can't possibly work for someone as sophisticated as them. They'll choose a convoluted investment strategy with 7 moving parts over a simple index fund because simple feels beneath their intellectual level. I've managed hundreds of employees over 8 years, and I can't tell you how many times I've seen brilliant people sabotage themselves this way. One of my former clients was a neurologist. She was managing people's brains, literally. But she couldn't resist complex financial products that promised tax optimization and alternative beta exposure. She'd spend hours explaining these strategies to me, clearly proud of understanding something so intricate. A basic 60-40 portfolio would have earned her 40% more over the same period. But that was too boring for someone with her IQ. Here's the thing about intelligence. It makes you excellent at rationalizing bad decisions. Your brain is so good at constructing logical frameworks that you can justify almost anything. I've run my own businesses and worked as a financial advisor and consultant for 15 years now. The smartest clients are often the hardest to help because they can out-argue themselves into terrible positions. Let me share something from just last year. A tech entrepreneur I know, brilliant guy, sold his first company for $8 million, decided to invest heavily in cryptocurrency. Not a small speculative position, but 60% of his liquid net worth. When I questioned it, he had answers for everything. He'd studied blockchain technology, understood the protocols, could explain cryptographic principles. He lost $3.2 million in 9 months. He knew everything about the technology and nothing about risk management. The emotional trap is huge too. Smart people hate being wrong. They've built their entire identity around being right. So when a financial decision starts going south, they double down instead of cutting losses. It's not about the money anymore. It's about proving they weren't wrong in the first place. I've watched intelligent investors hold losing positions for years, adding money every quarter, because admitting the initial decision was flawed felt impossible. Now I need to pause here and ask something of you. Creating this content takes real time. My team and I spend hours researching, scripting, and producing these videos to bring you advice that can genuinely change your financial trajectory. If you're finding value here, if something I've said has made you think differently, hit that subscribe button. It encourages our work and helps us continue delivering insights to valuable people like you. Your subscription tells us this matters to you. Another massive issue. Smart people overthink emotion out of the equation, and that backfires spectacularly. They create these rational frameworks for decision-making and ignore that humans, even smart ones, are emotional creatures. Fear and greed drive financial markets, not logic. I've given lectures on entrepreneurship for years, and this is what I emphasize. Acknowledge your emotions. Don't pretend they don't exist. There's also the tendency to ignore basic financial hygiene because it seems too mundane. Budgeting? That's for people who don't make good money. Emergency funds? Unnecessary when you have credit and earning potential. Insurance? A waste of money that could be invested. I had a client making $400,000 a year with no disability insurance. "I'm young and healthy," he said. "The odds are tiny." Then he got diagnosed with an autoimmune disease and couldn't work for 18 months. Smart people calculate odds but forget that unlikely events still happen. Let me ask you something. Where are you watching this from? Drop your location in the comments. I'm curious where my audience is tuning in from today. Are you in the States, Mexico, Canada, France? Let me know. Here's what I want you to understand. Intelligence is a tool, not a shield. It helps you understand complex concepts, but it doesn't protect you from psychological biases, emotional decisions, or simple ignorance about how money actually works. Some of the wealthiest people I know aren't the smartest in the traditional sense, but they're wise. They understand their limitations. They ask for help. They value experience over theory. The path forward is humility. Recognize that being smart in one area doesn't make you smart in all areas. Hire experts. Listen to people who've actually built wealth, not just studied it. Simplify instead of complicate. And for the love of all that's profitable, separate your ego from your investment decisions. Your intelligence is a gift. Don't let it become your financial curse. Make sure to check out our last video in the description and on the end screen. We dive deep into the psychology of wealth building. Trust me, it'll shift how you think about money forever.